Good morning, everyone. This is Daily Trade Analysis with the market forecast for today, 25th of October. So, overnight, Nasdaq is looking sideways. We are holding last week high 11,430. That's quite good, this blue line, and also pre-market lows. But the other side of the coin is that 11,500 is acting as resistance for both yesterday's high and also in pre-market high. So right now we are bouncing off these two ranges, consolidating, going sideways, and basically we are looking for this resistance from Friday 2 weeks ago, 11,500, in which we had the PPI news. And be careful with this candle at these levels because a lot of resistance is still at these levels. Don't be too confident on this bull run because we are heading to resistance again and again. We have two levels. We reclaim this level at 11,400, so we can remove at least this one. But there's still resistance ahead, and shorts will be waiting for 11,700 and 12,000, more or less 12,100 for shorts again, to short again the market. Right now in the daily, we are quite nicely pushing up until this secondary. We can remove this first resistance. We are in this channel. We are approaching this level in which we are getting the EMA on the daily, the resistance in 11,800, more or less 700, 800, and also descending resistance from the daily candles. So be careful because we can see a lot of travel, a lot of choppy market, price action, and resistance. So be careful with your patience and risk management. Be disciplined and plan your trades accordingly. And I think Nasdaq will not be leading because I think S&P is at a critical level. As you can see, ES futures are at critical level 3,800. This is ahead of earnings today that are quite important. Today we are starting the big tech news, big tech earnings for the week, and we are at a critical level. So be careful if we break up or break down, because S&P's I think is waiting for earnings to do a big move. For sure, we are waiting in this level, and this is quite important to note. Dollar is right now trying to hold this critical level. We have these two rejections, rejection of the top from resistance, market structure owns off support, and we are at that level still 112. But right now we are seeing choppy action all these overnight sessions. So be careful with that because dollar plays a key component of earnings. So if we see dollar weakening, we can and earnings beating, we can expect a move higher in the S&Ps and the Nasdaq. Yields, 10 years pulling back. This is good news. 2% already in the red, and 2 years is 133 in the red. If we take a look to the inverted yield curve, we are right at that spot in which we rejected the top of the channel, but we are coming back to test again this pivot, and we would like to see some consolidation holding this and the final break into this final resistance at minus 0.16. Remember, this is the inverted yield curve. 10-year yields minus 2-year yields, and this is the most significant indicator for recession. Energy is right now in the red, minus 0.5%, is rejecting the previous gap that we had in June. And we can see crude oil weakening and also natural gas pulling back, bouncing off 5 with this big support on the daily. But For sure, energy is cooling, is chilling. That's good for the inflation and for our prices in the gas stations. And I think that's good news overall. So we had, let's take a look to the economic news today, because those are quite important. Today, we had the Case-Shiller home price for both year-over-year and month-over-month. Case-Shiller home price is a composite index for residential house prices in 20 metropolitan regions. So this is quite important to know for the housing market. We are expecting a little bit lower year-over-year and hopefully minus data in the month-over-month for house pricing index and also the Case-Shiller, and consumer confidence 1 hour after market opens. So remember, I will be waiting for sure for 10 for the consumer confidence to see if the consumer's confidence is decreasing, and then I can start maybe some positions on the Nasdaq. And I think that's all today. Not big news. The news are coming from the earnings. So if we go back to the chart and we check Microsoft, today is going to be a big one. We have at market close today Microsoft earnings. It's already gapping up a bit. It's fighting the EMA on the daily, and we can expect a push higher if earnings are good. Right now, most of the businesses, stocks, the companies are beating on earnings. Almost 70% of earnings were a beat instead of a miss. So I think Microsoft for sure has the market cap, enough market cap to push the market. So watch out for Microsoft, and also Alphabet, Google earnings after market closes. Also, those two today after market closes will start the big tech earnings this week. Tomorrow we have more, and Thursday are the big ones: Amazon, Apple, and Shopify. Consumer discretionary full power on Thursday. So be careful and watch your risk. As always, be patient, because we are in a very tricky market right now at critical levels for stocks and companies, also indices. So be careful, wait for your opportunity, and find those profits. I think that's all from my side. We review everything that I wanted to share with you guys for the forecast. One last note, sideways consolidation means sometimes distribution or accumulation, is Wyckoff analysis, so be careful. We can see a rotation back to 11,200, but I personally think we are going to break 11,500. We will see, but be careful and wait for those setups to appear. Don't chase, don't FOMO. There's plenty of opportunities during the day. As always, thank you for your time. If you have any questions, you can comment down below and I will try to respond to all of you. If you found this video useful, please remember to click the like button and subscribe to receive notifications when I upload new videos. Remember, I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time and see you in a couple of hours with the market update. Remember, discipline and risk management are key for success. Stay safe, everyone.